day to you. This is Sonny Aguilera, Finance of America, Stockton, California, Brookside office. Today we'd like to talk to you about the Equity Builder Program, which is currently offered through the Cal HFA state program. So today we want to talk about some of the myths and some of the facts of the program itself. We've talked to hundreds of people for the last couple months, and there's a lot of questions that go unanswered or a lot of confusion, even some confusion that happens with this program. What can I do? Can I qualify? How hard is it? So today we want to give kind of a good overview of what some of the myths are and what the actual facts are. You'll be surprised at some of these facts that you actually can qualify even when you think you can't. So let's start with some of these topics today, okay? Thank you. First of all, some people when they call, they're like, oh, this loan's really hard to approve. Does it take forever? And the answer to that is no, it's not. It's underwritten like any traditional loan. There is no definitive extra lag time other than a day or two from the loan having to go through CalHFA at final approval. But to get an approval, it's not difficult at all. Once we process your application here, we can issue you out an approval within 1 to 2 business days. Currently, that's what our time frame is running. So getting hard approvals, no. The main thing we ask is that you provide all the proper documentation. We want to see things like your W-2s. We want to see your pay stubs. We want to see your bank statements, and we want to see your taxes. And mainly with the W-2s, they're very important because we want to see all of your W-2s, okay? If you change jobs, if you're on unemployment or anything like that, we really need to see all that documentation to accurately account for your income. It could make or break your deal, so please, the more detail you provide us, the better job we can do to help you. This is a very sticky situation with a lot of people. There's a lot of people we talk to that say, I make too much money, blah, blah, blah. How do you know? So let's talk about that, okay? Income is derived by either a W-2 wage or 1099 income in most cases. Sometimes it's retirement income as well. So there are certain ways that we calculate your income. So for example, let's say you're a married couple and you make $115,000 a year as the husband, and your wife makes $75,000 a year. And the area median income limit for, say, Alameda County is $120,880. So you automatically assume that you can't qualify. That is not the case. What we do is we don't take household income and we don't take combined income. We take the income that we only provide. So if you and your wife would like to be on this loan, you can. We just use the gentleman's income at the 115. We exclude the wife's income, and you don't have to verify it. We keep them both on the loan and you both can own the home. So that is one of the big things we've learned doing this program. It's become very helpful to people and has really truly helped many borrowers get into their homes. The other thing with that is that also with income, you may have multiple jobs. So say you make $115,000 a year again, but you also have, say, IHSS income because you take care of a family member. Well, guess what? We do not have to count the IHSS income either, which means, guess what? You can approve for the Equity Builder. Yes, see? That's what I'm trying to say. Some of these myths are just ways to deter you from applying for this mortgage. It is a wonderful program. Okay? So one of the other things we get told a lot is, well, I can only qualify for this and I can only qualify for that, which means that, I can only qualify for a 1-bedroom condo because, this is a low income, blah, blah, blah. Well, to tell you the truth, that's not necessarily the case. We are doing loans in single family residences. Now, granted, some of the prices are under $1 million, which I will tell you, yes, that is true. However, with the market shifting a little bit and it leveling out in terms of being a buyer and a seller's market, we're seeing a lot of buyers have the opportunity to purchase single-family residences or even townhomes that meet their family's needs. So please do not deter yourself from trying to get into this program because at this present time, it can be very helpful to you and you can get the home that you desire. Now, one of the other things regarding the income that we'd like to talk to you about is bonuses and RSUs. So we always want to hear what your base income is, okay? So if your base income is 120 and you just got a sign-on bonus for a job here locally, guess what? We can count your base income only. Why? Because we can't validate that you're going to receive this bonus after the fact that you sign on. So that is one of the tricks we also use to get people approved for the program. Yay! You're getting a home, trust me. Now let's talk about down payment options, okay? So how we set up the equity builder is you get 10% of the sales price. Okay, so let's talk numbers. If your sales price is $800,000, you in turn get $80,000 that you can use in a number of ways. If you have very little to no money, what we can do is you can use 5% for your down payment and up to 5% to cover your closing costs, which means you come in with relatively nothing. Great news, right? Yay. So say you have more money to put down, or you have parents gifting you money. You can then in turn go up to 20% down of your own money, which can either come from your own funds, checking, savings, 401k, stocks, Robinhood, crypto, etc. And a family member can gift you money as well. Come up with 20%, which would be $160,000. You can get another $80,000 from the equity, and you now have a 70% loan to value transaction. What does this mean for you? It means you can possibly have more buying power and get the home you want, and everybody wins. Yay! And one of the other things we want to talk about as well is PMI. So the myth on PMI is that you have to pay it on every mortgage, and this is true. Okay, every mortgage that does not have 20% down has some sort of PMI, private mortgage insurance, factored into it. But the good news is that if you have a really good credit score and you're doing a conventional loan, we have a way to buy out the PMI and use the equity builder to do that. So what does that mean for you? That means that it gives you more buying power because it lowers your overall debt ratio so you can get the house you want. Yay! Win again. So the bottom line is this program is a huge win for Californians across the state. We here at Finance America in Stockton have approved hundreds of applicants since this program came out. We are funding loans now as we speak, and the program works wonderfully. Please do not hesitate to reach out to us. Please do not hesitate to look us up online, www.foamortgage.com/saguilera. We will be more than happy to assist you. We'll be more than happy to talk to you. We'll be more than happy to guide you. The main thing is don't be afraid to try for something. The worst we'll tell you is no. But if we can find a way to make it work for you, we will definitely do that. Have a wonderful day. This is Sonny Aguilera. Stay blessed. Stay safe.